Welcome. Let's get straight into it. As you can see here, the Federal Reserve leaves rates unchanged. Dot plot signals lower rates in the cards for 2026. I think Jerome Powell's press conference yesterday definitely set the stage for a bloodbath. I don't necessarily see how this is going to push the economy. Like I stated in my earlier video, there's no reason for buying pressure right now. Everything is just, I hate to say it, use the terminology, but just liquidity grabs, just setting the stage for something ominous to come forward sooner rather than later. The decision of the Fed to keep the rates unchanged, 3.5 to 3.7, has, as expected. The tone of how he said it, though, was definitely the bombshell. It was very hawkish. He explicitly warned that the war in Iran is wreaking havoc on their economic projections, and it's kind of just the wait and see business that he's gonna take. That's the usual strategy of Jerome Powell lately, is just the wait and see. And we all know how that conflict is going over there in Iran, as we can see the live updates right now currently from the CBS News, fake news, whatever kind of news. The Iran war is escalating sharply after an Israeli strike on Iran's vast South Pars natural gas field. Iran is threatening zero restraint and retaliating with attacks on energy infrastructure across the region, including Kuwait, Qatar, pushing oil and gas prices even higher. So I don't see any soft landing for any of this to come forward. This is the Brent crude oil right here, and it's used to price 2/3 of the world's internationally traded oil. So everybody is going to be watching the Brent crude oil for the most part, and I think most smart money is going to move into this right now as Iran conflict effectively shut the Strait of Hormuz. What do we think is going to come from that? There's no soft landing that I can see from this. The scary part is the median inflation for 2026. It was hiked to 2.7, and 14 out of the 19 FOMC members now expect either zero or at most one rate cut for most of the year. That pivot, the pivot, if you know, the pivot, for June is dead. I don't see a pivot happening for June. No, and again, not until towards the end of 2026, given the circumstances over in the Middle East come to some rest. We're not going to see any economic relief anytime soon. The outlook is Jerome Powell told us straight up, higher energy prices will push up overall inflation. And for tech stocks, NQ namely, this valuation is a nightmare. It's an absolute nightmare. Higher rates equals lower multiples, period. The PPI data came out at 0.7, and that's double miss between energy costs and wholesale prices. Inflation isn't sticky anymore. It's rebounding. That's why you're seeing the inverse correlation between oil goes up and NASDAQ goes down, and obviously vice versa. As you can see, this morning, we broke the 24,400 support like it was nothing, like it was paper. We broke through that, and of course, we immediately saw volume spike, buy-side liquidity come in here to push it to these levels here. The smart money isn't buying because they like the economy. They're buying because I feel like they're triggering retail stops. That's all it is. They're just triggering stops right now and getting ready for that big move, I feel, to the downside. As you can see here on this 9-minute chart, there's a sharp reversal at these levels right here. And then a small little consolidation, possible for a breakout given, again, the circumstances, how they manifest themselves in the Middle East. But that reversal back from this point, I feel like this down here, this is just a dead cat bounce. This is just a dead cat bounce. And we're currently fighting this SMA right here, EMA. And here we are, market just open. Let's see how it's gonna iterate itself here. And while we're waiting for that, I just want to say, per my research, the smart money perspective is different. I feel like they're looking for value. They're rotating out of the growth, the tech stocks, and into real assets, the energy assets, like I said, the crude oil and things of that nature. If crude stays above $95, NQ is going to have a hard, very hard time sustaining any rally. The institutions, they're selling at the rips. They're selling at the top. Look at this. They're selling at the peaks. Every time there's a good push, then they're unloading. I don't know what more anyone needs to see, but definitely the institutions are trying to get out. They're trying to offload. So while us retail, we're trying to catch the falling knife, essentially. You want to wait for that knife to hit the floor. I think that would be the most prudent thing to do. Wait for that knife to hit the floor, vibrate a little bit, and come to a rest. And then we'll see what we can do. We'll see what we can do, because right now, currently, that's exactly what we're experiencing. Now, as the London session comes to open, I expect extreme volatility. Powell just told you he's not coming to save the market, essentially. It's every man for himself. He's going to wait and see, as he puts it. So trade with a size that allows you to sleep at night, that if it goes against you, you're not going to be in dire straits, no pun intended. But you're not going to be really affected too much by the loss, because it's the wild, wild west right now from the Middle East. Just trade smart and retain in your brain, sustain to maintain. You can always protect how much you lose, but how much you win is unlimited. Don't make it the other way around. Okay? Peace.